Last year, a private investor in London bought £10,000 worth of physical silver bars. The price of silver did not fall, the market did not crash, but the moment he completed the purchase, nearly £2,000 disappeared instantly. Not because of bad investing, because of tax. In the United Kingdom, buying physical silver comes with an immediate 20% VAT charge. Most people only discover this after they buy. And yet, quietly, some investors legally structure around it. Because while most people see silver as just another metal, governments, energy companies, and technology manufacturers increasingly see it as something far more important: a strategic resource. Silver sits inside almost every major industrial transition happening right now. Solar panels require it. Electric vehicles use significantly more silver than traditional cars. Advanced electronics depend on it. And now, the rapid expansion of AI data centers is adding even more pressure to global supply chains. For years, the world has been consuming more silver than it produces, not dramatically overnight, but steadily, quietly, and markets tend to notice these imbalances eventually. So the real question is not simply whether silver rises or falls next year. The real question is this: how do investors in the UK gain exposure efficiently without unnecessary tax friction? There are three approaches most serious investors look at, and each one solves a different problem. The first approach is the simplest: digital exposure through a UK stocks and shares ISA. Inside an ISA, investments can grow free from capital gains tax. Many investors use physically backed silver exchange traded products for this reason. One commonly used example is SSLN, a fund backed by allocated physical silver stored in professional vaults. The advantage is efficiency: no physical storage, no insurance concerns, no VAT on buying the fund itself. And inside the ISA structure, gains remain sheltered from UK capital gains tax. For long-term investors who want simple exposure to the silver market, this is often the cleanest route. But not everyone trusts purely digital ownership. Some investors want something physical, something they can hold. That usually leads to silver coins and bars. Now here is where UK tax law becomes interesting. Standard silver bars are normally subject to VAT when purchased, but certain UK legal tender coins, such as Silver Britannias, have a different advantage. Because they are classified as official UK currency, they are exempt from capital gains tax for UK residents. That does not remove the upfront VAT, but it changes the taxation on future profits. For some investors, especially long-term holders, that distinction matters a lot. The third approach is less common, but widely used among experienced bullion buyers: offshore vaulted silver. Here is the logic. If physical silver never enters the United Kingdom, UK import VAT is generally not triggered. Some investors therefore buy silver stored directly inside professional vaults in places like Zurich or Singapore. The silver stays inside the vaulting system. It can later be sold within that system. And because the metal never physically crosses into the UK, the VAT event may never occur. Of course, the moment the silver is imported into Britain, the tax position changes immediately. So this approach is typically designed for long-term storage, not home delivery. One important distinction: investing in silver is very different from speculating on leveraged trading platforms. Many new investors are drawn towards CFDs and spread betting because they appear cheap and fast. But leveraged products amplify losses just as aggressively as gains. Most retail traders lose money using them. Professional investors usually focus first on preservation of capital, then growth, not the other way around. Silver may or may not move dramatically higher next year. Nobody knows. But what is becoming harder to ignore is its growing role inside the modern global economy. Energy systems need it. Technology needs it. Industrial manufacturing needs it. And as demand rises, investors are beginning to pay closer attention to how they own it, not just whether they own it. This is not financial advice, and silver remains a volatile asset that can fall sharply in price. But understanding the structure behind an investment is often just as important as the investment itself. If you enjoyed this breakdown, subscribe for more AI Investor's Edge.